Welcome back to another episode of my trading vlog, where most of the views come from returning subscribers. If that's you, I'd appreciate the like. If not, consider subscribing. Of course, everything today was down on the downgrade of US credit by Fitch, and that had an impact throughout the markets. And I don't think it really put that big of a dent in AMC's reactionary trend. Currently, we've seen a large dip down, and now we're trying to find support on that 469 level and looking for wave B to complete and push up into wave C. What this does is this tempers our analysis a little bit. I'm going to drag down the high here and pull this extension tool there, and you can see our targets came down a little bit, but I'm still expecting to get a nice little pop here in AMC, and this is of course a reactionary trend before we continue downward again after finding this high near 761 initial impulse. Now we come down in a reactionary trend, and now we go back into another reactionary trend. It's going to be back and forth for a long time through a very tall trading range, and I'll be covering that as we go along. Of course, if the price dips below 469, then there's a very high chance that this reactionary trend is done and we just start heading lower. We won't get that bearish confirmation though until we pass below these prior lows at 452 on the hourly time frame. I would expect to see one more push up for wave C. I really would, but we're not getting it. Nope. And so here we are finding ourselves coming down again. Gonna keep a close eye on that. Now, GameStop had me guessing for a while, but sure enough, we broke down out of a pennant through here that served as a bear flag, and we reached the targets, 275 and 2086. This was my minute wave C target. We've definitely reached it. The RSI is now going deeply oversold multiple times. We should be finding an end to this motive wave soon. Implied volatility is rising here, and this is because the motive trend was down. Wave C is motive. And perhaps this wave B actually ended way back here. It's possible. It's possible this is A, B, and C of B, and that this is just A. So A, B, and C, and then this whole thing is the C wave. And it had a couple of interesting twists and turns in it, but sure enough, we've come to the end of it, I believe, and we can look forward to a reactionary trend heading up. Now, you're going to hear me say reactionary trend a lot, and what that means is corrective bounce, corrective rally. We've had a big push down. It's time to bring implied volatility to a more normal level while price retraces where it's been in the last couple of weeks. The volume, of course, isn't that great. On a daily candle, this looks brutal. Now, into the meat and bones. Let's talk about SPY today because it totally sank. Of course, on the hourly time frame, you can see we passed above bullish reversal confirmation at 431, and price just ran to the races, and we started to top out. I've been trying to figure out what exactly would be the best analysis up here. It's been kind of confusing. You can see that I anticipated we were at the top of minute wave 5 as early as July 27th, then now looking for a push down in an ABC correction. And this could be it, but I doubt it. I think this is the first 2 or 3 waves of an impulse heading lower, which is going to be wave A of A, B, and C correcting that 5 wave at the minute degree. In other words, we're going to be fluctuating a lot. The market's going to be bouncing around. Implied volatility today skyrocketed. We had a massive sell-off on that news. Zooming into the minute time frame, we get a little better idea of what's going on. Let me just catch my charts from going crazy. You can see that yesterday's analysis was really good. I shared this in the Discord, of course. After we had that fish downgrade, I immediately went through here and started putting down these price targets, and we've reached every single one of them with an astounding amount of accuracy. Elliott wave theory is incredible, but you need to pair it with other sorts of analysis as well. I was on Reddit the other day, yesterday, and someone was commenting that they didn't really like Elliott wave theory because, well, eventually you just have to change your count and then it all changes. And well, yes, here's the thing. Elliott wave is a logic count. It's a logic count. If, then, and onward we go. There is no perfect way to predict price movement. There really isn't. You have to temper this with other kinds of analysis. And the value here in Elliott wave is evident to me. It's pretty obvious. I entered into a short position through a bearish ETF. So I purchased a call of SPXU, and what that does is it gives me exposure to the short side of the market, and it was the perfect time to do that. It must have been in the last 5 or 10 minutes of the day. I opened that call, and then the Fitch news came out in like an hour. Price of SPY tanked, and the value of that call has appreciated. I'm gonna go over that chart too. It's kind of cool that you can do that in Thinkorswim. So here we go, beginning our new 5-wave count heading lower. The peak of 2 from 731, we've had impulse 1, 2. And now this is all 3 through here. It's possible that this was actually 4. And I say that because you can see how price grinds sideways through wave 2. We're looking for an alternation in form and corrective waves, namely 2 and 4. And so wave 4 would be a sharp, and that's what we have here is this big sharp. And I was texting, or I think I was on Twitter, I was saying that we were going to see whether or not that corrective bounce would finish before markets opened, and if they did, then we would see a big impulse down in pre-market. We did have exactly that. We had a downtrend test, a failure to break through there, and price began to plummet and just sank all the way through the morning. It was intense. I did day trade today, but I didn't do a very good job. I overtraded, classic cap mistake. So I did end positively, but more or less above break even. Not great. I went ahead and exited some of my Playboy calls as well. I can already tell that I'm going to regret holding calls and not shares, and so I reduced my position there. I am still bullish on Playboy, and I am thinking that we're going to see more upside, but overall I think I want to move some cash around and do some reallocating in my account, which is pretty small. So if you want to help me grow the account, you can donate. I'm unemployed right now, and my account is probably still a little bigger than it should be. I had to take a big chunk of it out when I lost my job, obviously. So if you want to help me trade, if you want to see my account build, then you feel free to donate. Anyway, so from here, I'm actually expecting to see a bounce, because if this was a sharp wave 4 alternating from the flat wave C back here, then this impulse is 5. And what we're looking for now is impulse heading higher. Sometimes wave B can be tricky and set a new low, which this may be. We could be looking at, I'm going to do this right here, A, B. We're looking for C to come up to like 451 probably. I could use this motive wave and this extension target, maybe even 452 before we start coming lower. There could be a very small inverted head and shoulder pattern down here that could take the rest of the day and after hours and into early pre-market. And maybe we get a green day tomorrow. NVIDIA. I sound like a broken record at this point saying that I was looking for the top at 473.89 and we hit there. We entered into a corrective bounce, which was targeting 466, wave B right here. We met that, price spun there a bit, and then sank, broke that uptrend, passed bearish reversal at 461, and then plummeted down to 443, which is another bearish reversal level. And sure enough, price is closing just below there, which makes me wonder if we're going to spin here for a while. We could just continue to see the dump bring the price lower. The target's at 425.98 or 404.15. Again, I was calling for this top, and we're starting to see it build here. This confirms perhaps a double top pattern. If you're doing a chart pattern analysis, I would recommend doing a double top pattern through here. Very likely to see some waffling, a little bear flag or a handle on the double top pattern there. Implied volatility just incredibly high and just increasing. It's still going up, which is insane to me because you'd think it would start dropping, but no. The RSI is at 50. We'll see if it can bounce here or not. NVIDIA looks like it's heading lower. AMD on the daily time frame, that is a massive bearish candle. We call that a bearish engulfing. Super high volume, implied volatility here dropping, which makes more sense than NVIDIA's implied volatility rising, I think. Nonetheless, this does look like a reversal to me. It really, really does. AMD. Let's go ahead and look at the Elliott wave count and see how all this plays into it. Looks like I was expecting to find the end of minor wave 4, and you can see I have 4 and C down here. It's possible that we just finished it, and we held support at 107.20, which is where I would be expecting to find support. Again, expecting sideways grind through here, and that is what does seem to be appearing. 10-year treasury yields rose pretty sharply on that news, and sure enough, the markets dropped. When yields increase, this means that bonds are being sold. There is only so much value a bond can have, the initial principal plus the interest. And so when bond premiums go up, the yields come down. So bond premiums currently are dropping and interest rates are rising. That makes a lot of sense. If US credit or US debt just got downgraded, then that means treasuries are inherently worth less, and they got dumped, and that raises rates. Let's see what that did to the dollar. Here we are on the dollar, DXY, on the hourly time frame. This is the chart I've been following for a while now. I was kind of just showing you here in this weird diagram how I was expecting these double touches of a trend line to form before we had big impulses going the other way. Well, we had that here, and then again here. Of course, I had to make this trend line a little internal, and that's okay. This is, of course, leading out of a motive wave A into corrective wave B down here at a larger degree. And you can see that I'm actually expecting wave C to be coming higher, and I'm targeting 104.678, I believe, currently. This comes from, yes, this target right here. And if I wanted to really clean this up, I would be using the extremes on the hourly time frame, and that actually had a big impact. So the first target's 103.185, the second target's 105.40. I was telling you a while ago that price broke down below 100, but it was too early to get really bearish because B can set new lows too, and that sucks when it does. Essentially, the dollar was either going to drop to 92 or rally to 105, and it looks like we're going to be rallying to 105. Of course, this is the dollar bounce from hell that I've been waiting for a very, very, very long time. Of course, trends in the market are very slow, so this makes a lot of sense. As equities turn bearish, it's probably related to this dollar strength, yields rising. There you go. It's that simple sometimes. It really is. Of course, precious metals fell on this, and so maybe this is the dip to be buying there. And with that, I think I want to wrap it up. I got a lot to edit here, and those are the biggest moves I saw today. Let's go to SPXU before we sign off. If you're interested in SPXU, I know most people aren't, but this is an inverse ETF of SPY, and this is what I've been following. And these divergences are so bullish down here. It's crazy. Yesterday I was saying that it's like 100% sure we're going to go up, and then we actually did, and I was like, wow, go me. And that's why I purchased that call. At any rate, this is what the current count looks like, and I haven't done any real serious wave analysis down through here, but you can be rest assured that I will be doing an impulse wave count as we see the market slump. Probably going to come way up to above 14 here, which spells out a very sharp downturn in equities, perhaps even faster than the rate at which it rose from the most recent yearly low. Anyway, that's going to be all for today. Happy trading.